Hey guys, it's Wolf here, back with a very important video today. And quickly before we start, I want to share with you that I'm sick again. Okay, like I've been saying, I've been working really hard. You want to go really hard in the bear market. I went a little too hard. I was running like crazy and just working like crazy, so I got sick again. So I'm not at my full energy right now, but it doesn't matter. I'm going hard still. Okay, but anyway, after this video, I'm going to chill. But what I'm going to share with you in this video is that right now you can see here so the number of companies based on market cap, okay, and this is the market cap ranges from 50 million to 1 trillion. And like right now there's in public markets there's 5 over 1 trillion companies. In crypto, 0. You can see 100 billion to 500 billion, 107, and in crypto is 2, 10 billion to 100 billion, 1260, and in crypto 7. Like you can see, like there's insane growth potential. Even 50 to 100 million is 2x higher in public markets. Like the smallest one is even 2x higher in public markets. Like we are in the, like I've been talking about, there's the great book on Crossing the Chasm, where we are early innovators here, and the kind of like next that are not that early, and then we have the mass adoption guys, okay, and then we have the late late guys. These guys are people basically at this moment when so basically how this works is the product launches, okay, and something launches, and then it needs to go over this valley of death here. So 99% of new startups, for and especially tech startups, like literally tech startups falls, they fall like flies. Okay, that's why, for example, if you look at Naval Ravikant's portfolio, he's a venture capitalist. So there's two types of investor, many types of investor, but these are kind of like the two types of investors that I'm most intrigued by. So venture capitalist, and then we have, kind of like a long term value investor. Okay, so basically, venture capitalists invest in, and Tim Ferriss and Naval Ravikant are like venture capitalists. So they find new projects, okay, and they invest very early. Like they don't have any user adoption or anything like that. They just help to bootstrap the company. And if it happens to go like crazy, they make insane amounts of money. But the risk is very high, but the reward is also very high. If you look at, for example, Uber, like I've been talking about the example, this one guy invested 10k in Uber back in 2010, and right now that 10k is worth, in 2022, it's worth like 1 to 100 million. Okay, depending on how you basically, well, it depends, but but it's massive, insane gains. Okay, and yeah, it's great. So basically, that's the opportunity here with cryptocurrencies. Like I talked about, you want it to so billionaires talk all, this is the way of the billionaires, so get early plus this stressed, okay, assets. So right now cryptocurrencies, early and stressed assets, okay, and so yeah, so we need to get out of this valley of death, okay, very important. And there a lot of tech startups are not going to make it, okay, a lot of are not going to make it. So that's why it becomes this kind of like a you need to understand what has even the potential. That's why, for example, when I pick the picks that I have in a portfolio, uh, I always look at the 4 M's. I always just try go back to the fundamentals, what Charlie Munger and Warren Buffett talks about. Like, what's the meaning of the product, like protocol? What's the mode? Okay, because there will be competitors, and what also very important, the management. I think that management is one of the most underlooked aspects when it comes to like picking investments. A lot of people don't even, they, for example, if you look at some of the meme tokens, they have teams that no one knows who the team even is, so that's very dangerous. um that's like ape, like this, that's like ape VC. There's like no brains, you just buy something. I don't like that kind of investing because it's such a lottery. So even if you happen to make money, you still have that lottery mentality, and at some point it will bite your back, it will bite your butt. Like it's very dangerous. That's why what I'd like to do is just I have this is a great story that Charlie Munger and Warren Buffett talks about. I even emailed this at some point. So Warren Buffett and Charlie Munger, they actually had a third investor, friend in their group. So there was Warren Buffett, Charlie Munger, and I think his name was Eric or something. That just shows, but I think his name was Eric. So he was at the start of Berkshire Hathaway. Berkshire Hathaway, there was a stock boom, right? And then Eric started taking leverage to buy Berkshire Hathaway stock. Okay, and then the stock market crashed. He got liquidated, and then he was forced to sell his stocks to Warren Buffett. Okay, and everybody knows, like, if you look at Berkshire Hathaway stocks, they literally, it's insane. Like, the one of the stock is like hundreds of thousands of dollars, one stock. Okay, so he lost on absolutely ridiculous amount, like billions and billions of dollars, because he wanted to get rich quick. Okay, that's the irony of everything, is that people who, like, there's the old saying that the fences that go up fast come down fast. Okay, so you want to build wealth slowly. This is one of the biggest, if not the biggest, secrets of becoming financially free. Okay, you need to build it slowly. Okay, you need to build like this. Okay, and good thing about here, if you look at here, for example, the market cap of the companies, we are in this kind of, like, you can see, like I showed you, we are in this kind of like phase where some of the projects will go over this hump, and then they will just absolutely crush it. Okay, I believe that I have at least a cup, I have very good portfolio in my opinion, and the reason for that is, like I say, like, I outwork everybody. Like, I was looking at, like, if you know the word, of course, the Rock, the influencer guy, the Rock. By the way, Rock is very funny. I want to talk about this. This is very important because it's likability bias, and Rock literally, it's weird. He looks like Asian, at the same time he looks like he's black, and at the same time he looks like he's white, and at the same time he looks like he's Spanish. Like, he's all these ethnicities in one, and he's very relatable. By the way, that's a very important topic. But that's just like way off topic. I don't know why I just went there, but I went there. I think that's very interesting. Nobody even talks about that. Very interesting. Anyway, so some of the companies will go over this hump, and I picked the projects based on four AMS by Charlie Munger, and then also I look at other things. I look at also user adoption, and it's very important. Like, is the token going to accrue and appreciate accrue value from the attention? Okay, so this is how it goes basically. So you have a product X and it solves a problem. Okay, it solves a problem. That's basically it. So if you look at capitalism, like, it's a free market. Anybody can do anything, and then the market decides what is good. Okay, and how you can see what is good? Well, how many users are there? Okay, and then when there are users, is there a chance that this value will go back to the token? Okay, it's very simple, but a lot of people make it very complicated. So yeah, but anyway, but it gets very tricky, and it gets deep. But that's like kind of like the overview, and also about building the wealth. So yeah, so this is what I might learn from a mentor. So basically, I don't know if you guys have businesses or whatever you have, you want to, or just investing, whatever it is, you need to build it slowly. Okay, because if you go from here to here, like a lot of people in the bull run, you will just lose all the money, like, no cap. Like, that's just how it's going to go. Okay, and so you want to build it slowly. Okay, and that's why I think this bear market right now is very insane opportunity, because when dollar cost averaging in bear market, you are building slowly. You are just taking position slowly. It not only builds the portfolio the right way, but it will also build your framework and your mindset the right way. You are not buying it to expect it to go right away up, right? You're like buying quality shit, holding it for at least 2 to 5 years, right? And then being rewarded handsomely if the picks were right. Okay, and everything is, like, people have like ask me about this, but everything is risky. Like, cryptocurrencies is risky. That's why there's massive, like, that's why a lot of people are not risk. One of the traits of very successful people is they do a lot. They have this kind of like hyperactivity, and also they take risks. Okay, but not dumb risk. You don't take risk like jump from off a building with no parachute. Like, or something like stupid. Like that's stupid. That's not risk. That's just plain moronic. But you know, there's the risk is like you calculate for your situation the risk reward. Okay, so for example, some of the picks I have in the portfolio, almost all of them literally, um, like I believe the risk reward is insane. Okay, one of the picks, for example, is synthetics, you know, or ETH. I think the risk reward ratio is insane. Let me actually show you here. For example, synthetics. Synthetics is one of those like it's very hard to wrap your head around. I'm not no by any means like master of these protocols. Like I've been talking about the Wall Street guys who can spin math around our heads like 24/7, and they work like they even outwork me probably. Um, because they have like it's insane. They're coked up and smashed up. You know, they just go. They're like freaking like it's insane. So, but you know, um, you know they can do the math. They are very smart. So these protocols, like I'm talking about, like this is one of the last times that if you really want to get crazy wealthy, like make crazy money with crypto, I think that this is one of the last times because it will get insanely harder. For example, if you look at like Frax share, FXS or Frax, it's very hard to wrap head around what's happening here or Maker. Okay, I have in my presentations I like go over like the basics and how I like kind of like understand it, but it goes deeper. It's all math and it's all like this massive thing. So I'm telling you like this you know it is one of the last moments to really just because we are early still. Well, we're kind of early, not crazy early. 2018 and 2020 were early. That's what we're um so we're not that early, but we are still early. Like you can see, the companies. There's no. We are in this middle of this, just like crossing this chasm, like the book talks about, crossing this chasm. And when that happens, this is where it gains it. And then a lot of people, basically majority of people in crypto, will come here. Okay, they want to buy here. Okay, and I think that that's just like that's foolish. But that's how the game goes, and that's where I'm going to sell. So at least part of it. I hope that I can, you know, just hold for like if like the best gains are if you buy something and you can hold it for 10 years and it keeps growing year after year after year. The compound effect is insane. That's how you can make like billions. Okay, we're talking about billions. And yeah. By the way, if you want to make billions, brands like you can make hundreds of millions with if you for example have companies where you solve a problem, specific problem, pretty broad. But if you want to get to the billions, you need to have a brand. Okay, that's why I think that for example ETH is such a strong pick because not with well it's right now proof of stake and it's the biggest one, biggest TVL, but also the brand. Okay, people don't understand that, and also if you have been watching the I watched one of the movies, the McDonald's one where the Ray Kroc, like this guy who like the Ray Kroc literally just bought like he was grinding and grinding and grinding. Then he found there's also a good book about it, but he bought McDonald's because not only they have the great system to deliver, and they had already user adoption. Tons of people were flocking into the restaurant, but it also had the very great name. McDonald's is a lot better than Ben's Burgers. You know, it's just McDonald's. So Ethereum, like it's just absolutely incredible name in my opinion. So that's also a lot of. It's a very strong point. It's a minor thing, but at the same time, I think that it makes a big difference. Um, so yeah. So think about if it was called like slime coin. That's like so weird, but Ethereum is just so great. So yeah, this is basically I've been rambling random stuff in this video. So, but yeah, the point is here that we are still early, but not that early. So if you want to take action, you kind of like need to take action right now. And as you can see on the crypto markets, the change when the momentum changes, it happens very fast. It happens extremely fast. And I'm not saying that we are definitely not in the bull market right now. I think that we are going to still go down. I think, but at least the probability that we are going to go down is massive. It is massive. So I'm not, just counting on that we are. This is it, okay. But at the same time, we are already like I've been talking about 70 to 80%. Actually, well, some of the projects that I'm buying, they're like 99% down. Like it's in it. The margin of safety is just great. That's also one of the things in the 4Ms. Um, So yeah, even if we go, so we have these ups and downs, and even if we go down, I'm buying more. Okay. So yeah, I hope this helped you. Let me know your thoughts. And this was a quick daily update. Very, very important. This is very important to see kind of like where we are at right now. You can see that we are getting there, and when that happens, that's when the crazy money will be made. When these like balance out and crypto takes over, that's when the crazy money takes out happens. That's when the like that's the switch. So that's why I'm also diversified, because I think it's foolish to just come to the markets and just buy like one token. I did that back in 2018 and 2020, and I happened to pick not the best pick, right? So, you know, yeah, I think that, right, as I learned, I'm because when like this is kind of like I talked about novel recount and venture capitalist. Um, you know, yeah. So basically, you want to diversify. Like they have like Naval Ravikant has like over. I think he has like 500 companies in his portfolio. I'm not going to go like 500 crypto picks because I think that's just way too. That's too much. But I think that 1 to 5 is just not enough. Well, if you have crazy conviction, that's what you want to play. I'm not a financial advisor, but I did the one trick pony back in 2018 and 2020, and it didn't work, so I'm just going to do the same thing over again. Okay, I'm diversifying because I watched people who diversified and just found the research, bought the best project, bought positions. Because you have to understand that even like if you buy some new position for 0.01 and you buy it with like $500, okay, if that thing bought like 100 access, you can make like, it's like, you can see here, so this is like $500 worth it. Let's just say that it goes to like 50k. That's only one pick. Oh, not that. So here, okay, that's just one pick. Okay, and if some of the picks like go to zero, well, you just lose $500. But if it goes up, you make 550k. So yeah, I think so. That's how I'm just balancing the risk reward, and yeah, that's my current outlook on it. I'm trying to study the best of the best. Okay, like the best venture capitalists in the crypto space, the best like long term investors, and the people who have been here for years and years and years, like what they are doing. And that's why one of the main things when managing and building a portfolio is managing risk, and that's why like 50% of my portfolio is just in plain ETH. Okay, because it's just you have to respect the high and mid and low caps. You have to respect the market caps. Okay, it's very important. So I'll go more deeply in this in the DeFi portfolio. Anyway, so I'm not a financial advisor. You can check out my stuff. Links in description. Thank you so much. See you in the next videos, and peace out.